What's going on, guys? It's Henry. I hope you're doing well. Right after I posted my last video Friday, Citron Research came in and disclosed a short position on NIO. What the heck is going on with Citron? Are they for real, or are they just another company trying to make some money by scaring others? You can't get stupid rich if you're being fooled, so I'm going to give you guys a real scoop and give you guys the facts on Citron and why Andrew left, who had Citron, said he sees the stock falling 48%. Before we dive in, remember, smash the like button because these research videos take a lot of work and it does really help out the channel. What's interesting about all of this is a lot of people are pointing out Citron's history of short selling Tesla. They put out a sell report on Tesla back when it was struggling and Workhorse just last month. Now they are on NIO. Andrew Left is the main guy at Citron and he calls out the stocks that are overvalued or fraudulent to short sell. If you don't know what short selling is, by the way, you borrow stock and then you sell it right away. You hope that it falls down lower so you can rebuy that and then give it back to the person that you borrowed it from, so you get to keep the difference in the profit. And this is a big deal because, well, it's a big deal for NIO overall because this guy was right a couple times before. Granted, he changed his mind on Tesla very fast and then he became a Tesla bull. Conspiracy theories that I read about online say Elon paid Citron to come out as short seller since China is helping out NIO unfairly with the $4,000 subsidy for non-luxury cars, which NIO qualifies for due to the swappable batteries. Well, you know, I doubt that Elon Musk would do that. He's so busy running his own company and it just doesn't make a lot of sense. So I think this is all speculation and rumors. However, nonetheless, a bearish Citron is a problem for the stock. And literally after half of the Friday's trading was done, well, the stock started tumbling a whole lot. It was above $50 and then it just ended off going down like 6% in the afternoon. And this is what Andrew Left said. Anyone buying NIO stock now is not buying a company or its prospects. Rather, they are buying three letters that move up and down on a screen in a note to investors on Friday through his research investment firm, Citron Research. And I'll tell you right off of the bat, when someone attacks a growing company that does have growing deliveries and revenues, there is some conflict of interest. He is biased because he wants it to fall so he can make money because he's on the position of a short seller. But let's take a look into what he says a little closer and decide for ourselves. Citron assigned a $25 price target on NIO stock on Friday, implying a 48% downside move to its last closing price. Left specifically took issue with NIO's new hatchback model, the ES6, a key mass market product NIO shifting from in terms of its niche luxury electric cars to a more affordable utility vehicle. Please tell me what's wrong with a more affordable car. Tesla came out with the Model 3 and it killed it, and for some reason Left is saying that, well, it's not going to work out for NIO. Give me a break. A more affordable car makes so much sense. Yes, people in China got money, but does everyone have money in China? No. Some people could really benefit from a cheaper vehicle. Some can't afford the current NIO models and would love to have a cheaper entry price into a NIO vehicle. So reason number one is just plain wrong in my opinion. Tesla sales for the Model 3 sedan maintain its position as China's most sold EV model for multiple months now, and the production volume was 22,929, which is over 10,000 more than it was back in September. So the October numbers for Tesla are just absolutely insane and they're exploding. And that would also suggest that Tesla Giga Shanghai is running at 5,000 per week. Now, NIO does that volume per month, and if they had a more affordable car added to their production, it would really help out bridge the gap between NIO sales and Tesla sales, and they can also seize the Chinese market opportunity much faster. So I smell something funny from Left on that comment. Next, let's see what else he had to say. Left said the ES6 model faces a serious threat from Tesla's Model Y, which is quickly ramping up production at the Shanghai Gigafactory. The Tesla China Model Y has an estimated price of 488,000 yuan, or about $73,895, and could see price cuts once it rolls off of the assembly lines. Well, it is true, they could see price cuts, but NIO could also do price cuts. And it's also a fair point, but still, I have to disagree on a few items. Taking a look at NIO's website, the interior is a high-tech mobile living space. The average range is 610 kilometers, and the price Well, it's about $75,000. But wait, the $4,000 subsidy pushes it just under Tesla. So I have to say there's competition, but there is a huge market opportunity here. NIO could also reduce their price. They're in their same price range as the Model Y. So what is the difference? NIO could also cut its price with Tesla if it needed to compete. So I have to say that the competition is there, but the market size is growing in China and the economics just make sense for a duopoly. Hold up, Henry, what is a duopoly? All right, quick economics lesson from Uncle Henry. In the American market, there are two manufacturers for airplanes and they run the entire market. They're called Boeing, which you've probably heard of, and there's another one called Airbus. In fact, they dominate 99% of the large airplane market because the costs are so high to get into manufacturing planes. These two firms dominate and they make a complete killing. Since there's two firms, it's not a monopoly, but a duopoly. Get it? Why is that important? Well, I can see the same thing happen for Tesla and NIO. They could become a duopoly. They both can make a stupid amount of money together in the same market. The next bearish comment Left had to say was this. After a rocky road of trading, NIO has found itself in uncharted territory that can never be justified by its current standing in the China EV market or its near-term prospects. As I laid out, here is my DCF model for NIO, and I think it's worth about $45 per share. That's my average price for the stock. At the rate it is growing, it can totally reach a point where the numbers do make sense, and I prove it with mathematics. So although Left is right that the stock did get a little too hot, above $50 per share, in my opinion as well, it's currently fairly valued in my opinion. It's so funny actually how the stock can't get away from my DCF model target. It's like Wall Street is watching what our YouTube family is doing, and it's just hilarious. And by the way, if you like my NIO DCF model, the financial model that I use to predict what the current price should be by discounting cash flow, sounds really fancy, super easy. It's actually down in the description for you guys for a free download below. Last but not least, I want to wrap up my thoughts on Citron Research and Andrew Left, because I know a lot of people are panicking and they're worried about their holdings in NIO, and this is what I want to say to you. Andrew Left, along with every other analyst on Wall Street, is right half of the time, and the other half of the time, they're just plain wrong. He has a record of being super aggressive in his predictions, and he has been off a whole lot. If you want to get a good laugh, and Andrew Left made a big call to short Peloton when Peloton was $29 per share. He put a $5 price target on Peloton. This is what he had to say. We know the CEO Foley, who's the CEO of Peloton, is trying to prop up the stock ahead of its lockup expiry in March, and this is an overvalued stock. Okay, that's one. Competition is undercutting them on every product, and the business is hard to scale. Take a look at where Peloton is now and tell me, is Andrew Left correct about his accusations? I mean, does that look like he was even close? He said $5 per share. That's like chicken over rice at a lunch truck. And even that's not $5 anymore in America. It's like $6 now. And the stock, it is currently trading at $100 per share. He was off by a factor of 20. Are you guys going to listen to someone who is off by a factor of 20, or are you going to be a long-term investor and make a rational decision for yourself? The bottom line is, don't be concerned with what a short seller says. Jim Chanos, another famous short seller, said Tesla was overvalued at $400 per share before the split. And in fact, I'm pretty sure he said it was overvalued at $200 per share before the split. The man also lost tons of money along with David Einhorn. Stay cool, don't overinvest in one stock, and hold them for the long term, and you will get stupid rich. Be patient. And also, check out the description. It has the NIO financial model for you. You can play around with the numbers. It's my gift to you. It's an Excel sheet, and it's also a great way for me to communicate with you when I do reopen the Weekly Option Income Academy soon. Other than that, thanks for watching. Subscribe, like, and I'll be back with another video very soon. Be aggressive in learning, but be safe in investing. No one ever sees me.